Okay, so Jensen Huang starts walking towards Sam Altman, and he's got two big, huge sacks of money, just big sacks of coin. He's walking up, ah, lugging these big bags of money. He hands them over to Sam Altman. Sam goes, "Oh, yes, my $100 billion. Thank you." And just as he goes to grab it, Jensen goes, "Psych." So here's what happened. Rewind to September 2025. OpenAI and NVIDIA announced this huge deal, a $100 billion deal, where OpenAI is basically going to get $100 billion of hardware resources, video cards, GPUs, et cetera, to run their LLMs. This is going to give them the firepower they need to completely defeat Anthropic, Google Gemini, and any other challengers in the LLM space. As we've established, if you watch my AI bubble explainer video, these GPUs, the physical hardware, is the lifeblood by which these LLM companies are able to stay alive. The accounting, the math does not work out. They're hemorrhaging money, but NVIDIA and other chip manufacturers are able to sort of prop this market up long term. But today, for that deal, it's January 30th. This broke about 4 or 5 hours ago. The Wall Street Journal announced that the deal is done. And they didn't say done. I want to be clear. They said that it is quote unquote on ice, which is basically needy investor speak for, hey, please, please, please don't mass sell off my NVIDIA stock. Everything is cool, but the deal is done. But if I said the deal is done, there would be a mass panic and a sell off, which is about to happen, but maybe not today. I would also be remiss if I did not mention that this comes either at or after the close of trading, close of business on Friday. So now everyone has the weekend to sort of settle and stress out before there is a mass panic sell-off of NVIDIA, potentially other stocks. Who knows what this will do to the private market valuation of OpenAI stock as well. So why did Jensen rip the deal? Why did he take those bags of money back from Sam Altman? We're getting some good gossip that's coming out now. It turns out NVIDIA's lawyers put a bunch of weasel words into the contract, as any good lawyer would, especially for a $100 billion deal. So Jensen is now going around parroting the line that it wasn't finalized and that the contract was really non-binding. And the more juicy bit is he criticized OpenAI for a quote unquote lack of discipline in their business approach, which totally tracks. If you've been in the AI space at all and you used around the time GPT-5 came out, you'll notice that the competency fell off a cliff compared to its competitors, compared to Gemini 3 Pro, compared to Opus 4.5. ChatGPT is not even competing in the same game anymore. They basically just dressed up last year's model with a little bit of extra thinking time to make it look like they did something. They are sunk. They are done. And so symbolically, though, think about what that means. The CEO of the company that is basically handing out shovels in the AI gold rush just looked at the biggest AI company on the scene and said, we don't believe in you anymore. When the house always wins, when the house is nervous and pulling back from a $100 billion deal with the world's largest AI company, the table knows something is wrong. I cover this more in depth in my AI bubble pop explainer video, but we'll give you a high level overview here. Let's talk about OpenAI's actual finances, because that paints the full picture. Internal documents leaked to The Information, which is a publication, show OpenAI is projecting a $14 billion loss in 2026. That's 3 times worse than their 25 estimate. And so going along that track between 2023 and 2028, that would mean their cumulative losses would be $44 billion. Okay, this is the world's best known AI company, even if they're not the best anymore, and they have not made money. I say that in all of my other videos. It's very important you understand this. OpenAI is a business. It is one of the best known businesses right now. It is dominating media cycles. It has for the past 2 to 3 years. They do not make money. They're paying AI engineers $1 million plus for their total compensation package, and the company does not make money. Are you following me? Their current revenue is only $13 billion. In order to turn a profit, they will need to 8x in 4 years. They're operating at a loss. They have not made money yet. They're not a profitable company. They will need to 8x to just get a little past breaking even. And some analysts are even saying that OpenAI, if they don't do another massive funding round, somebody doesn't give them another huge pile of money that they can just torch and set on fire, They will go bankrupt by 2027. That's what some analysts are saying. And they're not alone. I'll re-bring your attention to the MIT study that came out that said 95% of enterprise AI projects are generating zero return, not small returns, zero. And so big tech is spending over $500 billion on AI infrastructure this year, which is a big number. I mean, I'm not a billionaire. I don't know how big that is. Let me put it in context for you. That is bigger than the entire GDP of Singapore, which is not a poor country. And this is not a number that I just pulled out of my rear end. Goldman Sachs backs this up. Their specific figure is $527 billion for the hyperscalers alone in 2026, up from $350 billion last year. And if you look at any stock associated with the data center boom, you will see this trend quite. If this sounds like history rhymes a little bit, it's because it does. If we look back at the dot-com boom, Global Crossing, WorldCom spent about $500 billion on fiber optic infrastructure, expecting that demand that just never came. The infrastructure eventually got used, like these graphics cards that GPUs will, but the companies that made them went bankrupt before they could be used. So you have a massive infrastructure spend based on a gamble, zero real return on investment, and then bankruptcy, a bubble. So the only question in my mind is the exact timing of this, but I think we're starting to see this kick off. This is happening much earlier and faster than I expected. If you're new here, if we look back into history too, this is a repeating pattern with artificial intelligence. People were talking about this when ChatGPT was starting to gain some eminence in tech circles, but it seems like people have just totally dropped the thread. You're not hearing any major news outlets talk about this anymore because they are financially beholden to the tech companies they're in bed with. But AI has crashed before, 1974, 1987, and it's always the same pattern. There is hype. There's irrational spending, hoping that we can replace workers and achieve some kind of utopian state that, of course, will never come because only the ultra wealthy will profit from AI, not people like you and I. There's a reality check, there's funding cuts, and then there's stagnation. And we enter what's commonly termed another AI winter, where not a lot of active research and development goes on in AI. Does that mean we'll stop using LLMs? No, certainly not. They're certainly helpful in small use cases, coding, boilerplate, some basic design work. They're certainly helpful. I don't think anyone's disputing that at this point. But the research will go into stasis. And why is this like the other bubbles? I actually don't really think it is. I think this is much, much, much worse. We've already worked through the circular funding pattern. NVIDIA invests in OpenAI. OpenAI buys NVIDIA chips, who basically gives them funding by giving them hardware, which they can then claim depreciation on, which in some way you, the taxpayer, are going to end up paying for their tax burden relief. NVIDIA's revenue looks great. OpenAI's burn looks sustainable. And everyone's happy until folks start digging into what is actually the customer demand for this hard to evaluate thing. Then you see a valuation disconnect. And we're actually seeing this at a micro and macro level. But at the macro level, the S&P 500 is at 23x forward earnings. The 5 largest companies make up 30% of the index. This is the highest concentration we've seen of that in 50 years. So here's where we are in the grand scheme of things, to bring it home and to bring it more into a timeline for you. Things have accelerated significantly. And the place that we're in now is that non-AI startups are having trouble raising cash. So that means capital is too concentrated in plays that aren't working, these AI plays. How are they making money? They're trying to put ads into ChatGPT. It's not clear how that will actually work and how people will actually profit from it. How will you advertise on ChatGPT? There's no clear profit model. Then, and this is about to happen, startups in AI are going to start failing. And this is going to be like dominoes. You might have a few small ones start. You might have a couple of big companies miss their earnings call, and that's going to accelerate things significantly. But the cracks are going to start to show, and you're going to start to see more companies start to go under that are highly leveraged or entirely leveraged in the AI space. You're going to see OpenAI miss out on their next funding round. They're trying to raise, and I'm double checking my notes here to make sure my eyes aren't seeing double vision. They're trying to raise $100 billion at an $830 billion valuation. They're not profitable. They do not make money. This is a company that is not profitable yet, and they have an $830 billion valuation. What the heck is going on? And so if they can't close that, or if they close significantly below the 100 billion, that's also going to be a big signal. The NVIDIA collapse is not just breaking a few eggs to make an omelet. This is very significant. This is very significant. We should all pay attention to this. They lost faith in OpenAI's business model. No other AI company has proven that they have a different business model that is actually profiting. So what does that mean about those other AI companies? So in summary, the AI bubble is not coming anymore. It is here. We are starting to live through it. And the only question is how bad the fallout is going to be. It's not a question about survival for the major FANG corporations, Meta, Google, those places, they'll survive. It's just a matter of how much of a haircut are they going to take? How many layoffs are they going to do? Oh, well, they're going to do layoffs anyways to increase the CEO salary. But I'll keep covering this as it develops. I have since the beginning when I was being called a nut job and a loon and a conspiracy theorist for talking about the funding cycle, the circular funding going on in AI, all the way back last fall. If you've been with us since then, I'm going to keep talking about it. I am going to just revel in the fact that I was right. And if you disagree with me, I want to hear about it in the comments. If you agree with me and you see the cracks happening, let's hear about that too. I want to cover it in my next video. Please subscribe if you haven't and send this along to a friend who needs to see it. Thank you for watching.